Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the gold market. So here is a lot of interesting stuff compared to other markets. For instance, euro currency is absolutely nothing to talk about. Actually, on the gold market here, as you can see, significant action. And in general, if you remember in previous videos, we just was a bit surprising that gold shows significant upward action together with interest rates, which is usually not always, it's rare happens. Usually only in events when the big demand for safe havens coming, some geopolitical tensions or something of that sort. Normal conditions, they are opposite markets, just because the major rival for the gold is the interest-bearing assets such as the high dividend yields, high dividend stocks, bond market, and so on. So in the current circumstances, we'll take a look at performance of the interest rates. So today we see minor pullback starting, but in general, as I already have shown you many times on the monthly chart, you can see what the performance we have. And recently market sets the new record. Right here it was 298 is top. It's almost 3%, and 10-year yield has been reached. And all this stuff is going on with the conditions of the deep overbought situation. So we'll take a look at the overbought on the bond market. You could see how solidly overbought the 10-year yield, and on the weekly chart as well. So this performance definitely big. Supply stands behind this and it's pushing the yields higher. We suggest this might be 345 in some time, but currently this most significant recently upward action. And also you can see what's going on in the dollar index. Dollar is coming above the 100 level and keep going higher. So all this stuff together is pressing on the gold as well. And as we said, the gold market probably stands under pressure, and this topic with this ABCD pattern is not taken off the table yet. And indeed, yesterday, as you can see, once we finished discussing the possible bearish patterns that might be formed, market has collapsed immediately. Now, a few moments to keep an eye on. First of all, on this week, if even we will get this ABCD pattern, hardly market breaks the area below 19 even, because this probably will be the floor. It's because this is daily oversold and very strong support area. So this is the confidence. It's already tested for the first time, but again, it's not been broken. It might be retested. And also with this ABCD pattern, you can see that COP stands approximately in this area. So that will be very strong support. And if you intend to go short in gold and choosing the target, trying to not set the target below this area. So focus on this one, at least on current week, maybe in next week as well. So we'll see. But that probably the area where market will stop in the way down. Additionally, the one moment that we need to keep an eye on is possible bullish grabber. Appearing of the grabber here might be very tricky, and it just could mix all the plans for the bearish. It's just because overall performance looks bearish, very solid collapse, but appearing of the bullish grabber, it will become some kind of the risk factor that suggests market still could keep going higher. We probably could take it easier on the grabber if we wouldn't have the XOP right here. So if we'll take a look at the 4-time frame chart, recall what we said, that it would be nice if market hits the XOP. That was the reason why we were considering free drive yesterday, right? But market has ignored it in XOP and turns to the upward action under the pressure of the external factors, which is the interest rates and the dynamic of the dollar. But ABCD pattern is still valid. Market stands at the support, so 1946, 1940 area. And if market forms the grabber here, well, this really might be the tricky moment where it could fall to the XOP completed, to complete the grabber as well in the XOP, and then turn to some other action. Currently it seems, well, not very realistic maybe, something like fantastic, but well, previously I saw that sometimes it happens. So On a lower time frame, here's fib level, and on the hourly chart, you could see the market has completed downside XOP target. So 1940 is completed the XOP, and that creates the background for a possible pullback today. So, depending on what direction you would like to choose, you could act differently. So, for example, if you would like to go long, maybe it makes sense to wait whether we will get the grabber or not. If we will not get the grabber, the chances on a significant action here will be minimal. So, in this case, probably would be to skip the entry, because more chances is for the gold is to proceed with the downside ABCD on the daily chart. So, if you would like to go long here, for a short position here, that actually few good stops exist. So, for instance, we have here a nice frosting action, and if market will form the bread body sell, reaching the fib level here, here's we have the confidence. So that might be considered as an area where theoretically you could try to consider taking the short position, placing stop somewhere above the confidence. But again, the risky moment is a grabber. So if market will form the pullback today, simultaneously it means that here we probably get the grabber. So this is very tricky combination that's well, it's not mutually exclusive, because even forming the grabber here and forming bread and butter, on the bread and butter market could show the pullback, but it will not erase the grabber. So they are not totally confronting patterns. But still, the current situation demands from you significant attention, skills for trading, and there's lots of things that you need to keep an eye on. So that being said, for the bulls, wait at least for a grabber when be formed. If it will be formed, then theoretically you could try to stick with it, trying to take the position. At least appearing of the grabber could give you the pattern and clear places for stops and for entry. So you could adjust your risk if you would like to take the part. For bears, just keep watching for a pullback here, because market stands in agreement support. A minor pullback probably is, well, has not bad chance to happen. And watch for some kind of Jordan Napoli pattern. So reaching of this level 1955, 1960, has two levels seems interesting for possible taking the short position with a stop somewhere above the confidence. Once market starts bouncing down, move stops to the break-even and see what will happen. So that's let's call it as a preliminary trading plan that we could try to focus depending on what price behavior gold will show today and tomorrow.